Condor Gold's strategy is to construct and operate base case 2,300 tonnes a day. We bought the mill and it'll produce 80 to 100,000 ounces gold in stage one, and then we'll materially expand that production. And the second part of the strategy is to demonstrate a 5 million ounce gold district. The investment highlights, I've mentioned, I think we'll start with about 100,000 ounces of gold a year on about 8-year mine life. We've got 3 pits fully permitted, and I give the details here, and we'll come on to this. 1.12 million ounces, about 80% is in the indicated category of those permitted pits. We can expand that. We've got underground ounces of 1.2 million and take this closer to 170,000 ounces of gold a year. We believe we're on a significant district, which I'll come on to. In terms of prices, we're about $30 an ounce in the ground if we look at that, based on $1,750 gold price. On our pre-feasibility study, we're $690 all-in sustaining cash cost. At the end of February, we had $11 million of cash in the bank. Around about 0.4 times price to book on recent, or actually old NPVs done 6 years ago at $1,250 gold price. Potential to early cash flow, possible toll milling opportunities around in Nicaragua. And our resource is 2.4 million ounces today, of which half is indicated, half's inferred. Within the indicated portion, we have the reserve of 6.9 million tonnes. You can see here 675,000 ounces within that. Nicaragua is being touched on, so I don't expect, I won't spend long on this. So the India project is a 2-hour drive up the Pan American Highway from the main airport in the capital, Managua. And we're an hour's drive from El Limón mine, and La Libertad is over here. Calibre are trucking ore, 1,000 tonnes a day, from El Limón, an hour's away from us, to La Libertad, which has spare capacity over there. The Potreros concession, I've kept it on there, but that's where Mako is. We sold that concession to them about 18 months ago, and the other miners have been Bonanza. We have a low sulfidation epithermal vein system, the 2 inner former mining district operated by Noranda. The 2.4 million ounces is split over 7 deposits. It's really structurally controlled. The historic production was over 500,000 ounces at 13 grams prior to the mine's closure in 1956. So the mine's been closed now 75 years. And the other main districts of El Limón and Libertad that I referred to, and Bonanza, have all been mining during that period. So these epithermal systems tend to go on, and you find more and more gold as during the life of mine, often funded out of cash flow. The core area is these 3 vein sets of Landia, Mestiza, American, which I'll focus on. This is the pre-feasibility. This is the reserve pit we've got. There's 900,000 ounces of mineral resource. And of that, 92% indicated. Out of that falls the reserve number of 675,000 ounces at 3 grams. There's a 10-to-1 strip ratio on this, and this was done at 6.5 years ago on those numbers. And you can see, if you can see my mouse, we've been just completing a drilling program by the word La India, and this bend over here, we're completing. Those are the 2 high-grade starter pits. Here's some drill results from us. We've got over 80,000 meters of drilling on the project now, and 40 through the main La India pit. And you can see we've got 10 meters at 34 grams. That's a true width number. Near surface, we got 25 meters at 7.7 grams. And we're getting some great results on our infill drilling, which I'll come on to, but it's drilled very nicely. Here's the permitted zone. So this is looking north. It's a kilometer grid. The magenta color is everything within those magenta areas is permitted by the Ministry of the Environment. And the permit is to construct and operate the mine. And so it's fully permitted. And we've got 3 pits permitted, adding up to 1.12 million ounces at different grades. And you can see that the main pit, which I just showed you a photo of, is 1.2 kilometers long by 500 meters wide. And we've got waste dumps to the west and to the north. We have a haulage of 1.2 kilometers of the processing plant. So 1 million tons a year can come out of the pit and go through to the tailings storage facility here, get pumped there. And the plant is centrally located for the 3 pits. Underneath the pits, we've got 1 million ounces of gold. So all those pits could be pushed deeper with higher gold prices and so forth, there's a possibility to get more into those pits in due course, make that point. And from my mind, because we permitted the pits, that's the difficult bit, it's the open pit part. Actually putting portals in for underground will be relatively easy. So I would look at us having a couple of million ounces effectively permitted. This is just showing some of the peer group comparison. One of my friends in Canada said, look, how many open pittable projects are there that have got over 1 million ounces, and here's your all-in sustaining cash costs. And so Condor stands out in terms of grade at 3.3 grams open pittable, fully permitted. If I just go on to the SAG mill, which you referred to, Deborah. So about 6 weeks ago, we bought a new SAG mill for $6.5 million US from First Majestic Silver. First Majestic Silver had ordered and purchased a mill and paid for half of it from Metso Outotec in Finland. This is a brand new SAG mill, and it's 32 component parts within that. And it's everything from generators to variable drives to relining equipment. It's the whole package for the SAG mill. And that we paid $3 million in shares at 50 pence a share, which is a great endorsement. First Majestic liked the project. I had a conversation with them 10 days ago. And of the balance of the 3.5 million, we're paying that in phases. And we paid probably $2.5 million of that as we speak at the moment. The mill, the equipment's 100% ready to be shipped. We've instructed the first 3 containers from Canada, actually, parts are coming in. We're dealing with 8 different countries with the various different parts coming in for this. Depending which grade we use, the production will be about 100,000 ounces out of that mill. So we sized the mill. It's reduced our lead time for the project by 12 months. These mills take 45 weeks to manufacture. And there's often a design period of 2 to 3 months before, then a couple of months for 6 to 8 weeks to deliver. With the same mill, which is 24 foot in diameter and 17.5 foot long, with a bigger motor, the capacity can be increased by 22% to 2,800 tons. So that's the SAG mill. This is the fully permitted mill feed. These are all figures by SRK Consulting in Cardiff. And if I just give the interest of time, I just give the aggregate number. So of your 1.2 million ounces mineral resource, and once you do mining dilution, mining recovery, we have 8.5 million tons at 3.1 grams for 847,000 ounces that can be delivered to the processing plant, to the ROM pad. And you can see within that, there are a variety of grades, and Mestiza stands out as being quite high grade. At 5.7 grams head grade, if you like. And these are, so that's your mill feed. So you can see there's 100,000 ounces for 8 years just there. After metallurgical recovery, you'll have about 800,000 production ounces. And underneath this, we've got the underground, and that can add 50 to 60,000 ounces. If I high grade it, and I meant this is why we're doing some infill drilling, or done some infill drilling, we have a 50% higher grade than 3 grams. We have 1.6 million tons fully permitted at 4.6 grams open pit for 245,000 ounces. There's no low-grade stockpiling involved in that. And this would be where we would target our initial production to high grade to maximize, to improve, quicken the payback period, increase cash flow, and so forth. I've just given an example at the bottom here on the mill for 2,300 tons a day. If we put 4 gram material through, not 4.6, but let me be conservative, 4 grams, we have a 91% metallurgical recovery, and the Elimon La Libertad are averaging 94% metallurgical recovery. So we get about 94,000 ounces. And if we put a larger motor in and build a slightly bigger plant, and we have the mill, we have the material to feed through, we get to 117,000 ounces, assuming that's a steady state production on an annual basis after an initial ramp-up period, just to give an idea. So I think 100,000 ounces in the first year of production is easily achievable, of full after the initial ramp-up, as I say. Just in terms of drilling, we're on the last 2 drill holes out of a 3,500 meter drill program. This is just a photo of Google Maps. This is we've finished all these holes. There are going to be about 50 drill holes. So we're drilling on 25-meter centers. We're replacing some RC drilling that was put in 7 years ago because with PQ triple tubing to give a greater degree of certainty in the geological model. And this is the last drilling we'll need before mining. When we're mining, of course, it'll be grade control drilling and so forth. But some fantastic drill results. We've got 21 meters true width at 6.4 grams from 15 meters, including 8.6 meters at, including 15 meters, true width at 8.7 grams per ton. So very shallow. And we've got 17 meters true width at 3.3 grams. So these are including 2 meters at 15. So we've released these drill results, but they are very good and confirm the geological model. And importantly, we've got the width here for early mining. And if you do the maths on this, and it's on the press releases, there's about 60,000 ounces of gold. It's only within 35 meters of the surface. And that'll translate at $1,700 gold to over $90 million revenues, and there'll be about $60 million of free cash flow within those two starter pits. That's quite exciting for us to have a quick payback on any loans or on the upfront capex. We're clearing the site. This has been ongoing for 4 months now. We're halfway through this. We have a complete site layout. We own 100% of the land there. It's 11 hectares. In terms of the second part of the strategy, and I'll just move on, drilling down the 3 main vein sets of 2.1 million, we think we can add 900,000 ounces by drilling down those ore shoots and slightly along strike. And we've got the other 4 satellite ones, which might have 500,000 plus ounces on. That's the big upside for us early. In terms of drilling down the ore shoots, this is the southern end of the pit. So the photo I showed you, we now have a long section of the 1.3 million ounces, and there's a fault where the road is to the south of the pit. And you can see the whole system drops down 150 meters. This is preserved veins. It hasn't been weathered away. And we have 4 drill holes underneath the pit. Each is over 10 grams, and the average width is 8 meters. So importantly, for underground mining, we've got that width. This is completely open. And in underground mining terms, it's not too deep at 300 meters down. And these ore shoots, there might be another series of these ore shoots going to the south, but they'll just be underground targets with nothing in the first 150 meters probably. So there's another upside going on. Does it just stop because of the fault here? It's not showing any signs of it, but it's like to be buried. This is just going for the upside really at the moment. We're halfway through a drill program on this Cacao vein. There's 60,000 ounces here. And this is, I'll come on to this in a minute, but it's only 4 kilometers from the permitted plant. Again, the blue in this case is the outline of the permitted mine site infrastructure. So Cacao here, what we've done is we've put the first 2,000 meters in around this 60,000 ounce resource. We're drilling down dip and 100 meters around it. And we're stepping out at 100 meters along strike. And if you can see my mouse, we've done about, we're about 2,600 meters, and we're about the 3rd step out or 4th step out of 100 meters going this way. The complication technically is that this is a quartz plug that pushes through the host rock, and then you have 2,000 meters underneath colluvium, so you can't see the vein on the surface. You've got to drill underneath it. There's 20, 30 meters of colluvium. But we're hitting it. We're hitting the structure and we're hitting veins. It's in the labs. We're waiting for results to come back. But this would, if this comes back, it shows a 3,000 meter strike length. And that's much longer than the existing Landia vein. The textures and the vein width look as good as the vein on Landia, so it's looking promising. Just to show that we've got a big district here, we own all these 580 square kilometers. On the upside, we've taken a very multidisciplined approach of soil geochemistry, airborne geophysics, structural geological models, drilling, scouting, trenching. We've done all this while we've taken a while to get permitted and had some setbacks in that. We're showing a district play. So what are we up to at the moment? We have 80 people on the payroll there. We're buying all the surface rights. We have 95% of the lands offered. There are 6 landowners we're dealing with to get the balance. We're at advanced stages with all of them. They all have a price. We just don't want to overly pay for it. We're fully engineering the tailing storage facilities. We're over 75%. That's by Tierra Group in Denver. We're halfway through, in the summer will be completed the water management system, site-wide water balance. We're finalizing all the engineering studies as we speak. I'm in Tucson, just having had a meeting now with an engineering group for the final processing plant designs. And if I just explain that, we bought the SAG mill. We're now designing and engineering everything that goes either side of it, from the jaw crushers through to the tanks. And we'll award that contract within the next few days, I think. And going forward, we buy the rest of the land. The drilling of 3,500 meters, that'll be completed this week. That's in the starter pits I mentioned. We've got a drill rig that's moved to Mestiza already, so the 120,000 at 8 grams, that's there now. And we'll have another rig most likely going up there very shortly. We'll finish off that drilling for the upside on Cacao. So people can expect some good drill results continue to come through. We'll get the balance. We're importing the SAG mill. We've had to register as an import-export company. There's lots of half a dozen ministries we've had to deal with to get this done. Just environmental and social. We have today, as we speak, we have a water inauguration committee ceremony today is the word I'm looking for. A director from the Ministry of Water is coming. So we've installed for $50,000, that's about 170 now, we've installed a whole water purification plant by the village. Drinking water, there isn't any. We've been giving gallon jars away over the last 4 years, but we're actually installing a drinking water project as our flagship social project. But we're spending $20,000 to $25,000 a month in the community, and we take that very, very seriously. We have 10 people in the social team working with the communities. We have lots of different community engagement programs to maintain a social license to operate. So to wrap up, we've fully permitted to construct and operate the mine. Stage 1 will be 100,000 ounces. We'll materially expand that. We've got the mill feed for it. We think we're on a 5 million ounce gold district, so we're showing a path to that at the moment. We've got low quartile all-in sustaining cash costs of $690, $30 an ounce in the ground, and quite attractive economics. In terms of our share ownership, we are quoted in Toronto and in London. We have 22% of the company owned by the directors. That's Jim Mellon, the large holding, and myself. And with Ross Beatty in Canada as a small shareholder, and we have local shareholders in the form of Nicaragua Milling Company. And that concludes my presentation.
Thank you, Mark. I think that Paul Harris is going to join me for the Q&A, if you're okay with that.
Yeah, sure.
We have some audience questions.
Hi,
Paul. Nice to see you.
Likewise. Good afternoon.
Good afternoon.
Thank you for the update, Mark. The comments you started off on talking about Calibre and how they're trucking ore across Nicaragua. They're trucking from El Leon past India to the Libertad mill where they've got excess capacity. Did you sort of look into the possibility potentially of shipping your ore to them and toll processing it there rather than going through all the expense and the risk of building your own mill and plant?
Yes, we did. We're not under a CA with Calibre, so I can say that we've had some detailed discussions with them. We haven't reached any agreement with the moment. Obviously, that'd be commercial. We would be quite keen to get into some form of toll milling. But as I demonstrated with the mill feed, if we wanted to, we could probably put 3,000 to 4,000 tons a day through a mill. Yeah. We bought a mill that's got 2,300 to 2,800. You can't truck that amount of ore over to La Libertad, so there's sufficiently big project there with 2.4 million ounces going to hopefully 3.5 to 5 to actually have its own mill. So I think the toll milling makes sense for us to do. It would make sense for us to have an agreement to do in ahead of during our construction phase, if you'd like, to show what we're mining, to show we've got cash flow. But it's a big enough district to very much justify its own mine. And I don't think the roads in Nicaragua would take to take sort of 200 trucks a day going 4 hours drive by truck over to La Libertad. So we would like to do that. Nothing has materialized out of those conversations. They're aware of us, we're aware of them. They still have 1.2 million tons spare capacity this year. according to their figures. But the door is still open, and we'll see what happens.
Thank you. And just to sort of follow up on that, Mark, what would you say are the sort of 2 or 3 things that you need to do or that need to achieve for you to be able to sort of break ground?
When you're granted a permit in Nicaragua, you have 10 conditions before you're actually allowed. So you get the permit to construct and operate the mine, and the government says we want you to satisfy these conditions. One of those is fully engineering the tailings storage facility and signing off on it. So the government now, so that would be, and there are 10 little studies. So that completing all those conditions essentially. Now, in terms of the tailings storage facility and water retention dams, we're spending $1 million on that. We're 75% of the way through it. It'll be under international standards and so forth. So that needs to be done and completed. So those conditions need to be met. And one of those is buying the land. We're at 95%. We will get the balance. We last week filed with the government to say we're proceeding with construction. So there's a very significant part. Even though we haven't met all the conditions, we're kind of like, quite frankly, and many of them, some of them we've met 100%, some of them we're 80% there. And the government actually, and what our comment to them has been, we've ordered the mill, it's coming into the country. This is going to be a mine. We're starting, and that's why we're clearing the site preparation. And in Nicaragua, you have an administrative silence, so we can file that. If there's no objection from the government within 30 working days, it means that we've actually started the construction. So tactically, that's what we're doing. And we've had meetings we've had indirect meetings with officials effectively to guide us in that process. So I'm optimistic that we're taking the right route. But should that come through, we'll confirm that by announcement.
Excellent. Thank you, Mark.
So what is the time frame for getting the financing in place?
We'd like to have the financing in place in principle over the next, in 6 months' time. So the objective is to, while I'm here in Tucson and engineering, is to get the processing plant fully engineered to a point where we can order the equipment. That's one step that we need to put in place, because we've got the SAG mill. Now we need to get the jaw crushers and the conveyor belts and the gold drum and all that. But it has to be designed to fit into the mill we just bought. So there's a timing issue around that. We're FS level, so bankable feasibility or definitive feasibility level for many of our studies, and we will proceed with a bankable or definitive feasibility study and file that on CDAR. I think that'll help with the debt financing, but of course debt financing comes in at the end typically, and quite often you can get a commitment to finance on, say, a 60-40 basis, subject to certain conditions, one of which might be the filing of an FS study. But we're starting in 2 weeks, more geotechnical drilling to FS level. This week goes off metallurgy to FS level for $220,000. Hydrological pump tests we're doing. So we're just de-risk and doing those FS level studies. But I'd like the financing in place within, say, roughly 6 months' time. Might be a little longer, it might be give or take, but that'll be a guidance.
Are you planning on staging the financing? Doing one large?
Almost certainly. And we'll look at the optimal financing mix. I don't see it before 6 months, just to be clear. But is that a gold loan? Is that equity? Is it debt? Is it, what's the combination and best ratio on that? So we're running that at the moment, but it'll be a few more months.
And then I had a question about your CapEx, and I believe you did cover it, but can you touch on your CapEx again? What you're getting over the next couple of years?
Yeah, the CapEx in the pre-feasibility study is about 97 million US. That included obviously doing a feasibility, but also buying all the land and resettling people. So we've actually bought all the land. We spent 4 million, about 95%. We spent $4 million buying the land, so there's a reduction on that. And there's a reduction. So we're not doing any resettlement, which is we budgeted in $6 million for that. But one of the things we need to do, and this leads into the financing, is to update those CapEx numbers. So the PFS is 6.5 years old. So we need to get an updated number out based on the SAG mill that we bought. And that leads into finalizing the financing. But I don't see it changing materially. We might be able to do this for 70 million or 80 million in terms of capex based on this mill, but I don't have a definitive number. And we'll be doing FS level works, and the meetings I've just had this morning with FS level capex work is plus or minus 15%. So we're moving to get that done. So we have a definitive number that we can have with confidence. So we hit that target, and then we'll appoint EPC people. I met one yesterday, one I'm in their office at the moment in Tucson to do an EPC contract on the project, so EPCM. We're working through those now.
Okay, and if everything goes according to plan in terms of financing and getting all your studies done, and what would you say your timeline to production would be?
Well, I hope the construction in earnest, I don't just mean clearing the site, starts next year. As one of the consultants said to me, if this was in Australia and everything was in country, we could put it up in 9 months. It's a very simple SAG mill system. Nicaragua is going to take longer than that. It's going to be a minimum of 12 months. It's probably going to be, it might be longer, but that's assuming the equipment's in country. So I think that if we're looking at 18 months or so to first gold pour, we'd be doing quite well, but that's what I need to get the FS study on. I need to get the EPCM managers to commit to a timetable. I don't have that, so that's still work in progress.
Okay, great. Well, that ends us right on the hour. Mark, thank you so much for joining us and giving us an overview of Condor. It's definitely interesting times. Lots of activity in Nicaragua these days, so nice to see another mine being developed there.
Yes, well, after Macu's, the fourth big commercial mine will be the fifth.
Wow, that's great. Well, congratulations. Look forward to following the story and watching you progress. And thanks for joining us today.
Thank you.
And next up, I believe we have Steve Parsons, who's CEO of Gold Source Mines. Switching gears a little bit because we've been so focused on Nicaragua for the last 90 minutes.